Alright guys, today I'm going to look at the Bitcoin to US dollar chart, the Bitstamp chart here. And I'm going to go back through this bear market really quick. I did a video on it going a little more into detail, and I'll link that in the description, but I'll just fly through it real quick just so you can see how I use the fib retrace tool to determine areas of resistance and then targets. So from that video, you remembered that, the first retrace that we had that drop. If you pull a fib from the high to that first bounce, we got a reaction between the 618 and the 786, which is typical for a B wave. So if this was an A and that was a B, we would be in this zone. Now, the people that get in this zone, they have targets at the -236 and the -618. We come down, we hit first target to the tick, got a bounce, came down, hit the second target to the tick. There's nothing miraculous about this. There's a lot of people that use the fib retrace tool, a lot of bots. So typically, you'll any shorts that were in here, any bots that were going short are flipping back, or covering their positions here, or even flipping long. So that's why you have these reactions here. It's just a liquidity zone created by this fib retracement tool that all the bots are using. So, so the next thing you would do after that is you would come down to that ultimate low right there where it hit second target of that swing, and then we would go to this previous high here, and you just start the whole process over again. We come straight to the 50. All the algos that are shorting here have targets at the -236. And anybody that subsequently gets in short anywhere in here is going to have the ultimate target down here because they're aware of this. Whether it's a bot or someone that's just aware of these fib retracement and targets. So they'll be looking down here ultimately at the -236, and sure enough we got there. So there's nothing, I just want to go through this because I don't think many people are aware of the significance of this, and so that's why I really wanted to make people more aware. And one thing I saw was interesting here, and I didn't show this in my video before, but if you do the whole process over, see, we're just going from swing high to swing low, and then I'm going from swing high to swing low. We can just keep doing that all the way down on these swings. We came to the golden zone, to the tick, turned around. We had bots probably shorting there. We had plenty of people shorting. They're looking at targets at the -236 and -618. You can see we had a little reaction at the -236 there, and to the tick of the -618 on this swing from that 618. So those people were pretty happy they got in short there. Now let's drop down to this one and do the same thing. Well, what do you know? 618. The same target down here for the -618. I mean, the confluence down here of all these fib targets was absolutely ridiculous. I don't think that, obviously looking back on it in hindsight, you can tell how significant this was. And so that's why I'm wanting to make you guys aware of these fib retrace tools and the fact that these targets right here, the -618, -236, are very important. And so now we can just do the next one. Come down to this. Let's see, go up to the low here. You can see we hit the -618 again. Hit that target. We had a little bit of a reaction. A little bit of a reaction around this one, but ultimately came down to these more important targets, based on these swings back here. With ultimately the main target being this first major retrace right here, where, from the very beginning, because that's what most people are going to be looking towards, is this main retrace right here as the ultimate target down here. But as you can see in these swings, we had targets right at the exact same spot too with the -618. So there's no surprise that we had people closing shorts and flipping long right here, and that's why the volume decided to start picking up. So as you can see, the volume relative to back here picked up nicely in this range right here. above those targets. Once we tag that negative 236 and the negative 618 of those smaller swings, the volume started picking up, and we had a little bit of accumulation here and put in a nice bullish pattern here, and ended up getting the breakout. So just wanted to cover that real quick before I got into anything else, just so you're aware of the fib retrace tool. I have a tutorial on that, and I can link that in the description as well on how to set that up for anybody that hasn't seen that. One other thing I would like to show here that I showed in my last video, so I'm not going to go in super detail. In that video I showed where this was a W. That was the first failed impulse, and we put in a Y, and then we had a second failed impulse, and now we've put in a Z. The Z was either done here or it's done here, and I kind of go into that in my previous video. I'll talk about it a little bit more in this one. But assuming that the Z did finish there, then what we would look for is an ABC in this Z right here, because there's three waves in every one of these, in the W, the Y, and the Z. So in the W we had an A, B, C. In the Y, we had an A, B, C, and now in the Z, we'll have an A, B, C. So is it an A, B, and then this C all the way down? Now, the way I look at it is, when you have an A, B, you do a fib from the A to B, a fib extension, I mean, from the A to the B, and you can project where the C could go, and look where the C hit to the tick. High probability zone, 1618, right in this zone. This just happens to line up with all those fib targets I was just showing you just a second ago. So there was quite the hot box of support down here, because I think what a lot of people were looking for is for this price to get down to this horizontal level right here, at least to this horizontal level back here at this previous high at basically 3,000 to the tick. And personally, I was thinking that we would probably have a wick down too, maybe even down into like the 2750 range before we got a bounce. But since we had so much confluence up here between fib targets, and to me that kind of proves the theory that there are a lot of people using those fib targets, and either a lot of people or a lot of algorithms written to use those fib targets. So they cannot be ignored. You have to understand where those where the swings are that they're using and what the targets can be, because they're going to react at those targets. And that just shows how much confluence we had here and why we had this reaction down here. So the next thing that I like to look at is, you know, when we were coming down, you can look back historically at the RSI. And there's somewhat of a range in RSI where you really want to start looking for either shorts or longs. And if we go all the way back, you know, I'm not going to go too far, but back to 2015, anytime the RSI, and this is the daily chart by the way, anytime the RSI gets down into this little range right here between 30 and I just put this line on here at 20, anytime it gets between 20 and 30, you want to be looking for longs. And that's where you have to drop down to lower time frames, dig into the Elliot wave count, and you can get, you know, good risk to reward areas to get in while the RSI is in this range. So anytime that it has gotten in this range, we've had a bounce. Now, this was a little, this was the first time, this was the lowest the RSI had ever been on Bitcoin, I think. If I go all the way back, yeah, since 2012. Or 2011. This is the Bitstamp chart, so it's got the most price history. This is the lowest daily RSI we've ever had. So to not be looking for a place to long is just didn't make any sense. And so if you were aware of all those fib targets, they would have been prime locations to get in, because it's the lowest the RSI has ever been. We're hitting confluent areas in relation to fib retracements that have been established, you know, almost a year at that point. You know, looking at this main swing here with that negative 236, that was a year in the making for this trend to get down there. So the fact that the RSI got this oversold is mainly just because of this long and drawn out pattern we put in here. You know, there's a saying, range contraction leads to range expansion. All that means is the tighter the price range gets, you know, the more violent the move is coming out of it. So since this ranged for so long and it contracted down, if you ever use Bollinger Bands, you'll see how the Bollinger Bands got squeezed so tight right here that once you get the breakout, a lot of it is fueled by stop losses, because a lot of people that were going long, they had stop losses down below this low right here, so down somewhere below 5,800, 5,700. So when those stops start getting triggered, it just adds fuel to the fire, and you have this huge capitulation sell-off. So in that scenario, you know, once we've got into this range, and especially once we got below, you know, a lot of people probably got trapped right here thinking, you know, at this point we were already, if you look at the price, let me zoom in a little bit. If you look at the price right here, we're at 32, no wait, this one, 3,500. The RSI was already ticking up at that point. So a lot of people thought this was the bottom and we were going to start coming back up, and we had one more push down. And look how much bullish divergence there was on the daily. Between this low right here, I'll just draw it. So this was another signal to be getting in right here. We had massive bullish divergence. We had lower low in price, and in that same time period on the daily chart we had much higher RSIs. So, and it was ending at those fib targets right here. So that was it was a very good location to get in for a long. Looking back at it in hindsight, you know, I didn't take as big as a position as I would have liked. Because, you know, it's hard to know, especially when it's coming down and you're on Twitter and everybody's saying that it's going to go to at least 3,000, it's going to go to 2,500 before you get a bounce. You have to, a lot of times you just have to trust your technical analysis and understand how the fib retrace works, where targets are, how to read RSI, look for bullish divergence. You know, it comes down to having a personal understanding of your tools and your system to be able to get in on a good entry. Because a lot of times what people are saying on Twitter are, they're always going to be more bearish or more bullish than what the trend's actually going to be. It's just like when we were at all-time highs here, everybody was saying that it was going to go to, you know, 50,000 by the end of the year after we had a pullback. So the same way here, once we started rolling over, everybody said that it was going to go to 2,500, and sure enough, we got a bounce at 3150, something like that. So, you know, you just got to trust. You got to trust your indicators and your tools, and be able to find entries that way. So, with that said, what are we doing now? What I see is, I see bearish divergence now. What I see is a higher high in price. What I see is a higher high in price, but a much lower low in RSI on the daily here. So that doesn't mean that this can't continue up. I mean, obviously this RSI's got room to go, you know, even to double top here. But for that to happen, you have to realize that this right here, I'm just going to draw a range from there, and I'm going to make it red. Make that red, change it back to a solid line. So there's a range that we're in, or there's a range that we can expect resistance in, and that range is right here. Because whenever we put in a major support like this and it breaks, it's going to be incredible resistance on the way back up. There's going to be so many people covering longs here, flipping short. You just can't do it on one push. It would take a lot of volume for that, and I don't know if fundamentally we have what it takes to get through this on the first push. Even if we did, you know, it could look something like that, and then we come back through for a retrace. So it's very risky to be entering any fresh longs here. So what I'm looking for, just the same way that I was, you know, using the same methodology back here for bullish divergence, we had lower lows in price but higher lows in RSI. Now we're getting lower RSI highs and higher highs in price. So we have a bearish divergence now. So what I am personally looking for is short opportunities, and I am currently short right now, and I'll show you where I got in, but I can always close that if it looks like that we're going to go higher. But I ultimately plan to really scale in some shorts in this range right here because of this divergence here, and I just don't see the volume being able to get us through this major resistance on the first push without some kind of retrace, and not to mention the Elliot wave count. So I'm going to get into the Elliot wave count right now. So if you remember what I said here, like that was an A, B, and this all right here was the C that could have finished the Z. So if that was the case, from an Elliott wave perspective, this could be a 1-2 right here, and then we're putting in a 3, wherever that 3 is, and then we have a 4 and a 5 coming up. So if we have something like that, then we are in the 3. So how can we subdivide this 3 to figure out where we're at before I pull back for this 4? Now, the other way you can look at it is this A, B, C didn't finish until right here. We had a truncated 5th wave, and again, you need to watch my previous video if you want me to go into detail on that. But if that was the case, then this was our first wave right here. So that was our 1-2. So all of this was still part of the Z wave of this whole correction in the bear market, and so our bull scenario would have started right here, where this is a 1-2. And we're still looking for a 3. So nothing changes. Nothing really changes when it comes to Elliott wave, because we're still looking for a 3 here. So even if this was the 1-2, what we would be looking for is we would still be looking for 5 waves to complete in this 3, because this would have been the first sub wave of this 3, looking at it this way. And we'd be looking for 5 waves in this 3 to complete, for a 4-5 coming up. So we'll look at it like this, because I think a lot of people are assuming that this is the case right here. And so if we are looking at it like that, what you would want to do is do a fib extension from the bottom of the 1 to the top of the 1, down to the low of the 2. And what you can see is we've already come into the high probability zone. We've already broken through the high probability zone of this proposed count, Elliott wave count. So that's ultimately the high probability area for resistance. And you can see we had a nice rejection initially, and we ended up getting through it. Now we're above it now, so the next area from a fib extension standpoint would be the 2618. Which is ultimately right at 6100. It's right at the base of this where we broke down. There's a little bit of a range here, like I was showing before, where if you take it from like 5800, but the range goes all the way up to about 6150, and that would be close to the 2618 here. So that's a possible area for this 3 to end, since we are above this this first initial high probability zone for resistance. Based on this count, so the 3 could end up here, and that would make sense. And still looking at the RSI, we still have room to move up for this RSI to be a bearish divergence. I mean, it could come up quite a bit back into this range right here again, and we would still have bearish divergence. So the possibility is still there for us to get up here, but I'm staying cautious at the moment and really looking at the lower time frames. The other thing that I want to look at is if this was the case. So if this was, let me go from here. If we were looking at this as the 1-2, where could we expect the 3 to end? Now in this case, you can see where we had resistance here as well. We had a wick that came all the way up here, but we closed below this high probability zone based on this 1-2. Because let me just go ahead and do this. So it makes a little bit more sense. Alright, so if we're looking for something like that, where we're going to have 5 subwaves in this 3, we would have a 1, 2, which was a perfect 1, 2. You can even get subdivision out of that 1, A, B, C for the 2. Now, is this 3 done yet? This sub 3 wave of this 3 wave? That's what we have to ask, because we would come in for a 4 here in that scenario before we put a 5 up to finish up here to complete the 3. Somewhere in this range maybe, because right now what I see is a potential channel that we're in, and we could bounce around in this channel where the 4 just comes down and puts in some kind of pattern, you know, at the bottom range of this channel, and then we come up to put a 5 in back up at the top of the channel. And then we put in, you know, at that point the 3 is complete, this major 3 here, and then we come in for a 4, and that 4 could be a ABC, it could be a ABCDE, it could be a number of different corrective patterns that we could look for, and then ultimately come up for a 5 that we would hope could possibly break this range right here on a second attempt. And that would be the bullish scenario. That would be the ultimate bullish scenario, because in that case, it would ensure the fact that this low is most likely not going to break at that point, because we have 5 impulse waves off of the low. Now, from a bearish perspective, what people are looking at here is, if I just take this off, this is the bullish scenario. If this plays out right here, you can just about bet for certain that this low is not going to break again, because we have 5 impulse waves coming out of this. You would have some kind of correction that would probably last the rest of the year, honestly. But at least, you know, you could feel confident that this low is in, and you would just be looking for, at that point, you would be looking for the major retrace to get in. So just assuming that this 5 ends up here, I'm just doing a hypothetical fib retrace, you would ultimately be looking for some kind of correction to come down over the rest of the year down to an area where you could get in, the 0.5 or the 618, and that would set you up well for the next major wave, you know, possibly going into 2020, where we get back above 6,000 and we really start pushing to high levels. So that's what I'm looking at from an Elliott wave perspective. Now the bearish view, which has merit. I've seen a lot of people look at this way, and for anybody that are hyperwave fans out there, which, you know, I don't know enough about it to have an opinion, but I tend to not agree with it. There is a scenario where this is just a big ABC right here, and we still have a wave down, because in this count, what we've done is, so let me just show it because it's kind of hard to picture here. So if this was an AB, which I showed you just earlier, where I did the fib extension here and we had the target right here at the high probability. So if the C ended right here of that, so that completed the Z wave of the WXYXZ that I showed you earlier. So if that was the case, then, you know, this ABC wouldn't make sense. But if this C hasn't been put in yet, if the C is still yet to come, which from a symmetrical standpoint it doesn't make sense, and I'll show you why. Because the C has 5 waves. So the way I looked at it, the 5 waves would look something like this, where you have a 1, 2, and then most people that are saying that it finished right here are looking at it like that, where we had 5 complete like that for the C. And so that was the end of the ABC, and this whole ABC was just the end of the Z. So, but if that's not the case, the bears, their view is the C is still yet to come, and so the 5 would still need to finish down here, and this 4 is still in progress, and this 3 ended right here. So symmetrically, does that make sense? You have a little bitty 1, 2, and then you have this massive 3, 4, and then a 5 that has to come down to, you know, much lower levels. It just doesn't make sense to me. So the bearish view to me for this ABC right here to all be just the 4, like that symmetry just looks stupid. So I don't agree with that too much. To me, I think the highest probability is that we've put in the end of the bear market, and this isn't an ABC. It's actually just a 1, 2, 3, 4, 5. It's actually just a 1, 2, 3, 4, 5 of the first major 1, 2, 3, 4, 5. So when we're looking at it like that, this all could just be the 5 waves that complete the 1 of the next major cycle going into, you know, 2022, 2023, whatever it is. And so in that scenario, like I was showing you, you would want to pull a fib from whenever we put in a high, you know, whenever that is. It could be at the end of the summer. There's no telling, but you want to pull it to the top of wherever that is. And when we start retracing, where you would want to be getting in is between the 0.5 and the 618. And you know, it can get all the way down to the 786. It could even double bottom, like it did in 2015. You know, we came, and I think we even swept the lows in 2015, which that would be very unlikely in my mind if we put in these 5 impulse waves here. But it could always happen. But the high probability zone would be to be looking at getting in here for a 2 of potentially the next major cycle that's going to start. And the next thing you can do there is, after we put in the 2, I know I'm going through all this and we're probably months away, if not, you know, a year away before this happens, but what you can do is pull a fib extension from the low that we've already put in to wherever this future high is, down to where the low of that 2 is. And when you do that, what you'll see is you'll have high probability zones for a 3. And like we know in crypto, at least on the major cycles, it tends to hit higher extension levels. But this is just an idea of where you could have something kind of like that. And then ultimately the 5 is the one that's super complex, because within the 5 you'll have a bunch of subwaves. You'll have like a 1, 2, 3, 4, 5, and all that was a 1, 2, and then you'll have a 1, 2, 3, 4, 5, you know, and it's a very extended 5th wave that is very complex, much like this right here. This basically vertical run up right here was, from there to there, could have been all just a 5th wave, and it just had so much complexity in it, and it hit major extensions. So it could look similar to that, you know, on this next cycle, to where the 5 really gets complex and goes vertical again. So what we need to be planning for is looking for these beginning stages of the next bull run and understanding where we can get in, and that's what I plan to focus on, you know, the remainder of the year. So it could look something like that, and that's my bias anyway, I guess, because I am bullish on Bitcoin. So I don't have that bearish view. I certainly don't think it's going to 1800 like the hyperwave guys do, but you know, they've been doing this, they've been, I guess, looking at bubbles like this a lot longer than I have, so maybe there's some merit to what they're saying. But even if it does, you know, I'm playing things one day at a time. That's just how I do it, because I'm more of a short-term day and swing trader. So what I'm currently looking for is for a pattern like this to play out. We're in a channel right now. We've gotten above these fib extension ranges. I still see this zone right here needing to be touched before we get a major retrace. So we could always come back to the lower channel here to put in this 4 before we come up to a 5 in this range to complete the 3. And then we end up with a little bit more of a correction where a 4 could come down fairly low, or it could be quite shallow depending on how bullish we are. and then we'll have to put in a 5 here to challenge this to see if we can get above it and get to higher levels on this 5, or if we're going to double top on this range in a 5 and start our correction for the rest of the year. You know, going down to some of those fib targets I was showing from the fib retrace from the bottom here up to wherever this ending fifth wave will be. So those are my thoughts right now, and I'll drop down to a little bit lower time frame here so you can see where I got in a where I ultimately got in a short last night, because you know we're in this channel right here. There's no doubt about it. We're in a nice little channel. What I'm looking for is this 3 could be done right here. It depends on how you count this correction, but ultimately what I see is I see the potential for 5 waves to have been complete right here in this sub wave here. So it could be a 1, 2, 3, 4, and then in this 5 wave we have subdivision 2 to end a 5. And so what I was ultimately looking at last night is I was looking at, I could tell we were running out of gas because we were getting up to this upper range of this channel that we're in, and then we also have all this up above. So there's going to be a lot of people trying to front run everybody that they know is going to be shorting up here. So what I was looking at and what I could see was we had a nice channel forming here as well, and whenever we broke out of this channel is actually when I opened my short, and I had a stop up above here somewhere, because once we broke out of here, to me it just looked like we'd finished some kind of subwave here, and I thought the probability was decent that, you know, we could be coming in for a subwave 4 here before we go up for our 5 that I was showing on the higher time frames. So I'm still under the impression that we could range down for a while like this, just because from the higher time frames, like I've shown, I'll go back out here again to the 12-hour. We are running, it seems to be running out of gas, and I can tell you just from the candles, the way that they look currently, it looks like if it closes the way it's going to close, which that last 12-hour candle closed kind of nasty. If this 12-hour doesn't show much strength, I would expect us to start coming down, at least to retest this area right here in the lower channel, and see if we can gather support and come up for this 5. But currently I'm holding my short, and I don't plan on changing anything there until we start really showing some strength again, because the volume seems to be dying out. You know, we're getting pretty good bearish divergence on the chart. You know, we've made higher highs, and the RSI is not making higher highs; it's making lower highs. So I'm going to hold my short until we start getting some kind of momentum. But this is the ultimate count that I want to see. I want to see this play out. I want to see these 5 waves form within this 3, and for us to come in for a 4. No telling where that 4 will come down. We can ultimately have some targets. You know, whenever this 3 completes, pull a retrace up to the top of that 3, wherever it completes at, and the 4 high probability is between the 382 and the 50. So the 382, just hypothetically thinking, if we get up to right here, the 382 should line up somewhere with this support area right here. There's going to be a volume, there'll be a volume node at this price. If you ever use the VPVR, which I'll show you what that is here. Let me put that on there. So go to the VPVR, and I'll change it so we get a little bit more clarity here. Higher number, but you can see there's a volume node. You see this volume area right here? There's 2 volume nodes, so I would expect support there. And when you have these gaps in the volume, this is just showing you how much volume there was per price level. So at these price levels you can expect support. If we go down below 5,000, we could fall very, very rapidly back down to the 4,000 range, 4,200 range. So it's good to see this visual here of how there can be liquidity gaps, because you don't want to fall down below where there is liquidity, because it can quickly go back down to where it finds liquidity again. So I would ultimately look for a 4 to hold at the 382. And obviously this 5's not in yet, so you'll have to wait for that to be put in, and you can then you can look and see where that might end. So this video is probably getting a little too long, so I'm just going to go ahead and end it right here. But I hope this gives you some kind of idea of what to look for. Look for a channel like this. Keep an eye on this bearish divergence. If we start coming down and we can get support in this range right here, at the bottom of this channel, and also down here where we've had these volume nodes, look for a 5 to come up and complete in this zone that I think needs to be challenged again. Basically back where we broke the major resistance we had in 2018, or major support. So that's what I'm keeping an eye on. I'm currently short. I'm probably gonna reevaluate once we get down here whether or not I want to open a low leverage long up to here, and then really start piling in the shorts in this range, for a 4 to come in. So that's my game plan. I hope this helped. I hope this was informational for anybody that's not really familiar with Elliott wave or analyzing charts using these tools. So if you enjoyed this, subscribe to my channel. I plan to do more of these. My internet is super slow right now, so I don't upload as many videos, but that's going to change next week. And I plan to do a lot more, well, I don't know about a lot more, but I definitely plan on doing more videos on other coins other than Digitex. So I hope you guys enjoyed it. I'll see you next time.